The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. The Air Force Research Laboratory is partnering with Google Cloud using AI to accelerate defense research for air, space, and cyberspace forces. This is a new era of American innovation. Find out more at g.co/American innovation.
Reality radio for a really great future. We're talking real money.
We human beings have weird money brains. Actually, we have weird brains, just generally speaking, just kind of across the board. And we're always wanting things that we can't have. I mean, we want wealth without risk. We want life to be simple. We want it to be predictable. Predictable really is the key. Hi, everybody. Welcome to Talking Real Money. I'm Don McDonald in Florida. Tom Cock is in the great state of Washington. And you are across the fruited plains of America and Canada and Europe and Asia. You're listening to the podcast anyway, because we know you're all over the place. And we're here to talk about money with you. Our phone number is 855-935-TALK, 855-935-8255. It's an absolute fact, because we hear it all the time. You know it's true. All of these people on Wall Street exist for one primary purpose, and that is to tell you, based on today's numbers and what the past has been, what's going to happen in the future, because we don't like uncertainty. Therefore, we make rules of thumb. We make models. We try to tell you what's going to happen, and we don't do it very well.
No, we don't. We take the wrong things and don't pay attention to the right ones. This wonderful piece from Humble Dollar, which is something, it's a place worth reading. I think there's a lot of good stuff there. And I think it's all free if I have it right. But this article by Adam Grossman starts out with quoting the statistician George E.P. Box, who said, all models are wrong, but some are useful.
Now, bear in mind, models are predictive products. They're
Correct.
designed to predict. They're not model airplanes like Tom has hanging out there.
That's true. Thank you for that
You don't
clarification.
you don't have to sniff glue for these models.
Bring it on, man. Bring it on. And then he gets into some of the specifics, like market valuations. Are stocks overpriced? There's a thing called the CAPE. You may have heard of this.
Robert Shiller.
Cyclically adjusted price-earnings ratio. Not cyclically, that tries to tell you what's coming next. And then before 2000, Robert Shiller said, hey, things are, we're too exuberant about stocks. And then stocks took a tumble, so he looked like a genius. Although later he said, well, we don't really know what this all means if we can necessarily predict things. And he's had a hard time predicting anything since then, really.
Yeah.
I mean, the CAPE hasn't told you when to buy or sell.
But you know what's funny, though, is that this is a guy who won a Nobel Prize for his CAPE model, and he won it coincidentally in the exact same year. It was split between him and a gentleman by the name of Eugene Fama, who believes you can't predict anything by
modern portfolio theory, which I disagree with the author. According to what he says, modern portfolio says stock prices are always rational.
Yeah.
I don't think they're saying rational. No, what they're saying is everything is priced into the security. It doesn't mean they're rational, though. And I think Fama's even argued with that.
It doesn't
mean everything's.
I don't think that's because they go on to say in the article that that the markets reflect all available information.
That's what an efficient market is. Unless you're on the inside or something, which you can't do, you don't really know anything that the marketplace doesn't know. So this is a clear difference between Shiller and Fama. And the takeaway should be, okay, who do I believe, but what do I do with that information? Eugene Fama says you just own the market, you have the right amount of stocks, right amount of bonds, and you ignore everything else.
And sometimes it's going to be good, sometimes it's going to be bad, but generally speaking, it has been a profitable strategy.
Yeah, well, because stocks about 3/4 of the time go up instead of down. Shiller's approach would require you to be figuring out when to buy, when to sell, how to respond to things. And Fama even has said this. I asked the guys at the University of Chicago, okay, so you believe Shiller, what do you do with that information? how do you respond? I mean, it's really difficult.
And that's been our point over and over again when people call and say, well, should I get in now or should I wait to get in? And then, or should I get out and then wait for the market to go down and then get back in? You can't. How do you know when to get out and when to get back in? Because even Shiller's index, even his information has been wrong. Even the CAPE has been wrong at times. Yeah. And so you could have moved and you shouldn't have moved.
And I think there's a few you could pay attention to. You've been paid more for risky equities over time. Diversification works, and lower fees have meant more money in your pocket. Those are theories you can live with.
Yeah, and if you pay higher fees, you reduce your returns. 855-935-TALK. Call us.
Tom and Don are talking real money.
Ryan Reynolds here from Mint Mobile. With the price of just about everything going up, we thought we'd bring our prices down. So to help us, we brought in a reverse auctioneer, which is apparently a thing.
Mint Mobile Unlimited Premium Wireless. How to get 30, 30, bit to get 30, bit to get 20, 20, 20, bit to get 20, 20, bit to get 15, 15, 15, 15, just $15 a month? Sold! Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
Your guides to a really great financial future. Tom and Don are talking real money.
You know, when it comes to predicting the future, I've got several years of experience in the financial industry, and I found that all of the predictive models that I've ever heard of work right up until they don't. And the problem is the model never tells you when it's going to stop working, and it usually stops working for an unanticipated reason. And I want to give you, before we go to the phones, I want to give you one last interesting example from this same article, and that's a model called the Phillips Curve. This was developed back in the 1950s,
right?
And it's about inflation. It says this model looked back at the past, and it turns out that when unemployment was low, when people were all working, inflation rose. It went
Makes
up.
Sense.
When fewer people were working, inflation fell.
Yep.
And it held true for a very long period until about the year 2000, when unemployment was incredibly low and inflation didn't budge. It stayed low.
And did Phillips get fired then for that?
Apparently, the Phillips Curve lost some of its luster because. But what changed? What changed in about the year 2000?
That was because all the computers didn't work anymore after 1999,
Y2K,
right?
the whole. You remember that when the whole world shut down, right?
I do. Yeah.
Actually, what happened? What happened? The reason
nothing burger.
The reason prices didn't go up is because in that same period of time, China was exploding as a manufacturer of goods at much lower prices. So therefore, the fact that there were fewer people to work didn't really drive prices higher. We had a market that was driving prices lower that wasn't anticipated when the formula was originally established.
I can remember that with China. It was
all of a sudden.
It was, and I do remember the they used to say about China right then that the national bird of China was the crane.
Yeah.
Not the bird crane, the one that was putting stuff up, the building crane. That one.
Although I think
had
the
so many
Chinese have
up.
all kinds of myths and legends that involve the crane, the bird, too.
I know. Okay, for what it's worth, that's a serious aside. That actually was said.
That's the problem with trying to follow these models is that they're going to work until something happens that you could not have anticipated. Well, you could have, but you probably didn't. And it's going to throw everything off, and then it's not going to work. So quit trying to do it. You can't predict. Can we start with a simple fact? Let's all just agree to this fact. Except for you crazy people who go to
I got my hand up. I don't know what it is, but I'm going to go with it. What is it?
You cannot accurately and consistently predict the future. It cannot be done. It is literally impossible. You can guess it, and you might be right, but you can't predict it with any certainty.
Okay.
Okay? Can we accept that?
I will finish this show. That's my prediction.
Would you please? I hit my mic cable.
You got so excited.
I got so riled up. Anyway, give us a call. 855-935-TALK. Something's rattling now. 855-935-8255 is our phone number. And let's go to Newcastle. Catherine, welcome to Talking Real Money.
Hi, Tom and Don.
Hi,
My
Catherine.
question is about ETFs.
Okay.
I've been studying them, and I have an account at Schwab and an account at Vanguard. And I noticed that the Schwab ETFs, each share is about 20-something.
Mm-hmm.
But at Vanguard, the prices are all over the place. So how could it be that Schwab can set their prices so low?
I have the answer. Schwab has decided they have done, and this is their. Everybody can do whatever they choose to do with their prices. When Schwab's funds get too expensive, or it's all psychological, by the way.
Yep,
if they appear too expensive, for example, in fact, this summer, the Schwab 1000 Index Fund is going to split 10 shares for 1. So let's see what the Schwab 1000 Index is currently trading at
200 then or something? Is that what you're saying?
I'm going to look. The 1000 ETF is trading at $28.79 a share. So after the split, there'll be 10 times as many shares, but there'll be $2.80 a share or 90 cents a share. Won't make any difference.
The price per ETF in that regard is meaningless.
Meaningless.
And yet it's hard for people to understand that because it's not like the price of, well, even with individual stocks, right? Because you can have an individual stock that has a ridiculously high price.
Right. Like Berkshire Hathaway.
Yeah, exactly.
I mean, Berkshire Hathaway is not
I don't even know what
worth
that's
more
trading
money.
at now.
Berkshire Hathaway is the Class A is it's a lot. Let's see.
How much?
It's $731,000 a share.
Yeah, well, I guess I won't be buying a share today.
So is Berkshire Hathaway worth more than, let's say, Apple? No, it's not. It's worth less, actually. But its share price is $731,000, while Apple's share price is, let me pull it up, $196. The number is meaningless.
Yeah, it has no meaning. That's the right word.
Well, then,
yeah, go ahead.
How do they track, if you're increasing or if it's doing well or anything like that?
In the increase in the value, the percentage increase in the value.
Yes.
If you have a stock that's $1,000 a share and it goes up 10%, it's going to rise to $1,100 a share. If you have a stock that's $100 a share and it goes up 10%, it's going to go to $110 a share. They went up the same exact amount, even though one of them is a lot cheaper than the other one.
Okay.
The price is meaningless. It's arbitrary. And it usually is based on how long the stock has been around. For example, most stocks start trading at around $10 a share when they're brand new.
Yeah.
And so if they've been around for 1,000 years, they could trade at $1 million a share like Berkshire Hathaway.
I didn't realize that was $800K per share. That's nuts.
Yeah, it's nuts. And in fact, let me look back to see what Berkshire Hathaway was worth back in the way early days. When Berkshire Hathaway started trading in 1980, it was $290 a share.
Wow.
And now it's $731,000. But that is over the course of 45 years. And they never split the stock.
Nope.
Apple along the way has split the stock multiple times, making their shares appear cheaper, but you have more shares.
And some companies believe in that because they want to keep the share price reasonable.
Most companies believe in that.
Yeah, they want to do it.
And the primary reason companies split in the past was because of the round lot rule.
Yeah, exactly.
Or the odd lot rule.
100 here.
People needed to buy 100 shares of stock, or they paid an extra eighth of a point in a penalty, an extra
Remember
fee.
those days?
Nowadays, you can buy one share of a stock.
Buy partial shares.
You can buy partial shares of a stock. Yeah. So the price is totally arbitrary. Just remember that. Price is arbitrary. The way you judge the return is based on the capital gain and dividend from the fund every year. That's what matters.
And the way you judge
as a
the
percentage.
size of the company should be market capitalization. That would be the share price times the number of shares
right.
outstanding.
I mean, Berkshire
That's a
Hathaway. Berkshire Hathaway is $731,000, and it's what's it worth? No, I don't. Oh, because I'd have to do some more checking here to get its price, but it's worth a lot less than Apple.
Tom and Don are talking real money.
Does it ever feel like you're a marketing professional just speaking into the void? Well, with LinkedIn ads, you can know you're reaching the right decision makers. You can even target buyers by job title, industry, company, seniority, skills. Wait, did I say job title yet? Get started today and see how you can avoid the void and reach the right buyers with LinkedIn ads. We'll even give you a $100 credit on your next campaign. Get started at linkedin.com/results. Terms and conditions apply.
For your real life and real future, Tom and Don are talking real money.
Okay, got the numbers during the break. Again, Apple is about $196 a share.
Wait, we lost part of you there. What were you saying?
Okay, during the break, I looked it up. Apple is about $196 a share right now.
Yep. Mm-hmm.
Berkshire Hathaway is about $731,000 a share.
Slight difference there, sure.
Okay, big difference in the price. So does that mean Berkshire's a more valuable company?
Nope.
Berkshire's total market capitalization, its shares times its price, right at $1 billion or $1 trillion. $1 trillion.
That's bigger than I thought it was.
That's pretty big. However, Apple at $196 a share is worth almost 3 times that. Almost $3 trillion.
Is it the biggest again? Or who's the largest now? It's among them. I'll say that. Microsoft's, I know, up there. And
let me see what Microsoft's is.
Tesla boy could tell us more about that, I'm sure, where they
Tesla's
are.
Tesla's not there anymore.
No. Well, they
Microsoft is 3.5 because Apple's really taken a beating lately.
Yeah, that's
because
true
of their
with the
problems with their
situation.
AI. Theme park?
Mm-hmm. Importing.
I
Don't they make most of their phones?
They make all of their phones overseas.
And that could be a problem, right?
Well, plus they have these disappointments with their AI. They've promised some things they couldn't deliver. So, I mean, Microsoft, $475 a share, worth $3.5 trillion. So the price is irrelevant. It is truly it's a
and
made
it's another
up
reason. Another reason that the Dow Jones Industrial Average is a complete and utter joke.
Oh, the Dow is dumb.
Because they take that price. It has nothing to do with the size of the company to come up with the Dow Jones Industrial. It's
a dark, if you want it,
nothing.
The Dow Jones Industrial, can you imagine if it had Berkshire in it?
Let's add that. What do you say?
Oh my gosh. We'd be quoting 150,000 Dow.
I know.
Anyway, 855-935-TALK. That is our phone number. We do have from full lines. We've gone to empty lines, which means you can call us now and then you'll get in faster. Yep. But in the meantime, don't worry. We've got questions for you.
We got a lot of questions.
We get them from Talking Real Money all the time. And we appreciate that, by the way. We appreciate it. Go to Talking Real Money, contact us, and then send us a question. Go ahead.
I will read them from the Eiffel Tower if that makes you feel better.
You will not. You're not even taking your mic.
I know. Don wanted me to take my gear with. No. Matt from Alexandria, Virginia writes, "Hi, my wife and I are going to buy a house soon. And luckily, about a week before this tariff stock volatility, we reassessed our risk and decided to pull our money out of the market and keep it in cash. We're not market timers.
Thank
no
you for
regrets
saying
knowing
that
it has
part.
Gone back up. We know we need the cash for the house. This is about $450,000. Is the money fine to sit in a savings account, or should a portion of it be in short-term bonds to hedge against rates dropping? If so, what amount and where would it go? We will need the money anywhere from 30 days to 2 years from now."
That's a pretty wide window.
I would not use short-term bonds.
If it's a 30-day potential window.
Yeah. There's only one place savings. I would. Yeah, exactly. Yeah.
That's it.
That would be easy.
And it's funny.
It's still paying 4%.
I know. I was going to say, high-yield savings accounts have held up really well. It doesn't mean they will.
Nope. They could change very quickly. I mean, you see there's a lot of pressure from 1600 Pennsylvania to reduce rates. That would have a quick impact, I believe, on those high-yield savings.
Yeah, but I know on my Bread account, my bread savings account.
The interest rates are rising there, are they? Huh?
They're not falling.
Okay, they're not falling.
Apparently, what's the great
leaven?
word? They leavened the bread properly. No, they proved it well.
No, they proved
They
it well.
did the proper proving for a rising, or at least non-falling bread account.
It's a good name. I think bread is good.
It
Makes
used
sense.
to be Comenity.
Good brand.
I believe.
Yeah, well, way better.
Which
than
was
that,
Comenity was a
that was
lender of last resort for
I think it was bad brand. But no, Matt, I would go. I put it all in the high yield savings, hook it up to your bank account, move the money back and forth as you need it. But I would not buy any type of bonds because those could have volatility too.
Fluctuate, and that's.
I mean, you look at the bond market last week when everybody said, "Well, with stocks." Right. Well, everybody said stocks are down, bonds have to go up, and that did not happen on Friday. So
yeah, don't pay any attention to people who say this must
has
happen.
to.
Yeah.
No, it's
let's see. The best rates are still running about 4.3 at Open Bank and
money.
Everbank. 3.9s, 4.25s. Again, these are all bread savings. 4.3. Look at that.
Oh, it's rising.
5 Talk is our number.
Tom and Don are talking real money.
This episode is brought to you by Amazon Business. How can you free up your team from time-consuming office tasks? Amazon Business empowers leaders to not only streamline purchasing, but better support their teams so they can focus on strategy and growth. Free up your teams and focus on your future. Learn more about the technology, insights, and support available at amazonbusiness.com.
Reality radio for a really great future. We're talking real money.
As we are doing this show live, I know you listen to it as a podcast next week, but as we're doing it live, it's the day before Father's Day when we do this. Tomorrow's
you
Father's
never
Day,
let me
right?
do a theme show. Yeah, I mean, I always want to do like Christmas, or you never let me do that. So this is a big deal.
I don't like themed shows.
I know. I just said that, I think.
So anyway, Father's Day is coming up tomorrow, another stupid holiday.
Wait, I'm going to give you another Father's Day quote.
Right in line with all of the other stupid holidays.
This one from Harry Truman.
Oh, no.
I love this.
What do you have,
this
a book of Dad Day
Yeah,
things?
somebody gave me, one of my kids gave me this a long time ago.
It's a teeny tiny little book.
I know. I love this book.
Because there are so few good things said about fathers, apparently.
Apparently so. Harry Truman said, I have found the best way to give advice to your children is to find out what they want and then advise them to do it. Oh, that's good advice.
Oh, no.
Take
What does Harry know? No, find out what they want and then tell them to do the opposite. Then they'll do what you want them to do.
Then they won't give you one of these little nice books for Father's Day.
Yeah.
All right, let's talk about a few
I'm going to talk about that in a minute.
Okay.
All right, but here's the thing.
Please.
I'm telling you, Father's Day gifts tend to be
I don't want anything. I hope they're
really
listing nothing.
awful.
Please.
They do.
Yeah.
They tend to be really awful. Like, for example, do not give me a tie. I don't wear them. I have plenty of tongs for the grill. Don't give me any cooking tools.
Do you have a card that folds out like this, though?
No, I do not have a fold-out card, nor do I want one, because if you give me a card,
I love this.
It goes in the trash soon enough. It's not
This
like
one's
my
probably
wife,
30 years old,
who
too.
keeps all the cards, or Tom, who keeps all the cards.
I don't keep all of them, but I
Okay,
love
whatever.
this one.
But now, a magazine, instead of coming up with something that you can give your father, this article in Kiplinger's talks about what your father can do for you, the
Ask
kid.
not. Yes,
Yeah.
exactly.
So we're not getting anything. We're expected to give until we're dead, and our wives collect all the money because they killed us off sooner than later. And you ungrateful children don't pay any attention to all the great advice we give you. And am I sounding curmudgeonly or what?
Yes, I'm just going to go ahead and say I disagree with everything he's saying. All right, but here's what Kiplinger says.
I disclaim everything he said.
Every single item. Kiplinger says there's 5 ways dad can teach their kids to manage money.
And they're not going to listen.
No.
Go ahead.
But number 1, this is questionable. Number 1, give your children an allowance. No, there's considerable debate.
There is.
As to whether or not it makes sense or not to give your kids money for things working around the house. I've never done that. But because I was just saying, you live here. This is part of the deal. You got to help. And you don't get money for that.
But hold on. I got to call you on this one. I got to call you on this one. All right.
Yeah.
So you've got a
That's a surprise, I know.
You've got a 10-year-old child.
Yeah.
Okay. You had plenty of those. You had a whole slew of 10-year-old children.
That's true.
And they're not getting an allowance. So they want to go to the movies. They want to go buy something at the store.
I paid for those things.
That's the same thing.
No, I don't think it is. But
Well, because
okay,
then
fair
you're
enough.
not. But then by not
You're
giving them an
exchanging
allowance,
directly labor for that. All I'm saying is you're part of the deal here.
No.
But
What I'm saying is how do they realize the value of working for $1 if they just get whatever they want along the way?
We agreed before the show we'd question Kiplinger's, not me. I don't know why you're on me about
because
this. Because
you editorialized.
Okay, number 2.
You did. What?
Teach your
Go ahead.
children how to budget
with their allowance.
But that's a really hard one, by the way.
If
To
it
teach
was
them how to
easy,
budget.
it wouldn't
It
be
really is.
worthwhile.
All right, okay, I'm just
No,
saying.
but
That.
think about it for a minute. You're getting the allowance. You got the $5 or the $10 or the $20 a month.
Oh, you're saying then you go spend it any way you like?
No, you have to figure out, okay, when the kid says, oh, I want to go to the movies, but I spent all of my $20 on candy, you go,
Can't go.
You didn't budget. Here's how you budget.
And here's how I've done it with the latest, who's working, has an income. I have made her take 25% of her money and put it in savings.
Yeah, she's almost
and then every
an
quarter,
adult, though.
And then I take most of that and put it in a Roth IRA and I match it. So there's been some budgeting there. But here, number 3 is completely silly. Teach your child about taxes.
That is completely silly.
I don't know how you. I mean, they're talking
Have
about
them
your
help
tax
you with the
return or
taxes?
stuff. Yeah,
I don't want them messing it up.
Number 4, introduce your children to investing. Yes, we favor that. And emphasize, number 5, the importance of saving for retirement. Really hard to do with little kids.
That was something that you hold for when they're young adults, I think, is when you do that one. It's the investing one. I want to talk about that after the break. 855-935-TOM.
Tom and Don are talking real money.
At Capella University, you can learn at your own pace with our FlexPath learning format. Take 1 or 2 courses at a time and complete as many as you can in a 12-week billing session. With FlexPath, you can finish the bachelor's degree you started in 19 months and under $19,000. A different future is closer than you think with Capella University. Learn more at capella.edu. Fastest 25% of students. Cost varies by PACE, transfer credits, and other factors. Fees apply.
Your guides to a really great financial future. Tom and Don are talking real money.
Hello again. Welcome back to the program. I'm Don. That's Tom. We're talking real money with you on the radio and then on our podcast. And we have one of those every weekday except for market holidays. So it means we won't have one on the 19th.
Oh, look at you knowing your Juneteenth dates and everything.
That is a market holiday. And you can call us, though, every Saturday at 855-935-TALK, 855-935-8255, when we do a live radio show on Northwest News Radio in the Seattle area, Puget Soundish, and then becomes a podcast on Tuesdays and Wednesdays usually. Can switch a little. But I want to go back to your article about advice for kids, because we kind of glossed over with the part that I think is the most important part and often the most confusing and abused bit of advice that parents give their kids, or abusive financially, and that's the investing part.
Well, I'm gonna argue with you a little bit there. I mean, I think the saving part, always setting something aside for the future, is probably the most important thing.
Yeah,
than investing.
But the saving part is kind of easy. You know, when they're little, they put it in a piggy bank.
Kind of easy, but only half the country does it.
No. But if you're training your kids to do it, they're a little more pliable.
Oh, I see.
Okay, so if you're doing it for when they're young, it's it's like you put a piggy bank out and you go, and then in a year you go, look at how much money you have, and you show them how it grew just by saving with no interest. But then when you get into the investing, and this is something for the older kids, when they start getting jobs, 15, 16 years old.
Sure.
That's where your strategy, I think, is great, where you're helping them fund a Roth. The problem with parents teaching their kids about investing or adults teaching kids about investing is that so much of that investing education is bad. It's stock market games. It's picking,
most
or
of the
buying
time
the stock
picking,
a kid likes kind of thing.
And you know these guys because you go to Starbucks every day.
Right. Or you love Disney World, so buy Disney. Or you
use Amazon regularly, so you know about the company.
Buy what you know.
Totally untrue.
Which is a terrible lesson.
Yeah. Mm-hmm.
Because I think what it tells kids is that you're trying to beat the market. You're trying to get rich quickly. And I think it's a bad lesson. But I think the lesson of putting them in a Roth IRA and then showing them, and when they're old enough to understand the concept of the future. Kids don't understand the concept of the future. That's why they do stupid stuff.
10 minutes from now is the future.
Yeah. But
I agree.
When they're your daughter's age, when they're 16 and 17 and 18, then they start to understand there's a future beyond high school or beyond their parents' house. There is a future. And that's when you can show them what the value of starting at 18 is with a Roth IRA.
Wait, she's going to leave the house?
If she could, it'd be sooner.
Okay, back to the investing part. So, individual stocks, bad. Whole idea around sort of telling somebody you know something about the stock company, bad. Right practice is, kind of what I call the graduation stock, graduation fund, an all global,
You said stock.
I know. An all global portfolio like a DFAW or AVGE. You put it in there, you don't have to worry about it. Everything's taken care of. It grows. Going to bounce around a lot, but it's going to, if the future looks like the past, it will grow considerably. So, it's all taken care of for you. So something like that, I think, makes total sense. Then, as you said, Don, I think first is saving something. Second is saving for your retirement, which I think if you're 15, just hard to imagine 50 years down the road. Really difficult.
But when you show them the number, though, and they may not even get the 50 years, but when you show them the number, you say $500 put away today.
Yeah,
is
what that means.
$250,000 or whatever the number is. To them, it's like $250,000.
Right. Yeah.
I mean, we're talking real money.
Indeed, we are. And we also know that if you start early and save something and let it grow for all that time, it's going to be a massive number, even if you're not a great saver after that.
Plus, it gives you future flexibility.
Yeah.
You can have a rough go in latter years, and you don't have to save for retirement because you've taken care of so much of it early when you had your parents to fall back on, which is something.
Wait, they're coming back?
Some have. It's happened.
It's happened. Yes, it's happened.
You now have the granny flat for them to fall into, though, so you're good.
That's good. Remember when we closed off the basement?
We've had kids come back to the garage apartment.
We've had them come back
multiple
downstairs.
times.
We finally closed it off. We finally turned it into the TV room so they couldn't do it anymore. But here...
the one downstairs.
Downstairs, yeah. But here, now you're right, we got the granny flat. So unless I fill it with concrete or something, we're pretty well screwed.
You mean the old mausoleum? The
old mausoleum.
Never mind, I'm not even going to go there. 855-935-TALK is our phone number. That's 855-935-8255. Still not a lot of time, a little time. We could probably get another call in. But we do get a lot of questions in through TalkingRealMoney.com on the contact form. And Tom has another one of them right there in his never nicotine-stained fingers.
Never. Detroit, Michigan. This is Jason writes us, and you're going to have to look this one up because I'm not sure. I didn't have time to look before the show. Do any of the major investment companies offer a Roth SEP IRA? Roth SEP IRA. Now, of course, traditional SEP IRAs, I believe all of the major custodians still have those.
Charles
Some
Schwab.
of them got out of the business of simple, but SEP, of course,
Schwab
allows you
SEPs.
to save more as self-employed.
Schwab does SEPs. I know they do SEPs. Does Schwab do a Roth SEP? Let me find out. I'm going to dig a little deeper because I know they do SEPs. They're a great custodian for steps. Let me just find that. Offer a SEP Roth.
SEP Roth. I don't
SEP
know
Roth.
that it exists.
SEP Roth. I don't know either, but I'm looking.
I should have given you a little heads up.
Thank you. Yep, they do a SEP Roth. Oh, wait. SEP Roths? No, they do not offer SEP Roths. I'm sorry. I just saw SEP IRA, and I assumed that meant no, they don't. If Schwab doesn't have a SEP Roth, I don't think you're going to find anybody who does.
They are a thing, though. That's why I'm looking here.
I'm still looking. Oh, wait, I know how to look. I'm going to talk to my friend Chat.
She knows all.
Yeah, let's see. I'm just going to speak it.
Investors
do any custodians offer a SEP Roth IRA?
Yeah, it says here you can, but I cannot find a custodian who does it. So you're right. It's a stump, and let's see. Well, I wouldn't use them.
Let's see. No, they're legal.
Yeah,
but
I see them here as part of the Secure Act, but
I found one company, one, and I don't know who they are. So let me look them up. It's a company called IRA Financial Group.
Don't know it.
IRAfinancial.com. Oh, yeah, okay. No wonder. They're an alternatives place.
Yeah. Stupid.
Yeah. It says alternatives. I don't know. I don't know
what to tell you, Jason.
Nope.
That's an interesting question.
It's because they're new. Oh my gosh. Their SEP Roth costs $500 a year in annual fees.
Just
they're doing
fees?
Weird stuff. Yeah.
Oh, good Lord.
This is custodial fees. 855-935-TALK. Oh, never mind. Don't call. We don't have time.
Yeah, we do.
No, we don't.
Tom and Don are talking real money.
Why does the United States pay higher drug prices than other countries? Because America's the only country in the world where 340B hospitals mark up drug prices and PBM middlemen charge billions in hidden fees. Meanwhile, Americans subsidize the research and development for new cures. Other countries benefit, but don't pay their fair share. Crack down on the middlemen. End the free riding. Lower drug prices. Go to balancethescales.org to learn more. Paid for by Pharma.
For your real life and real future, Tom and Don are talking real money.
I found out why there aren't any SEP Roths yet. Because it's so new that the IRS and the Department of Labor haven't released full guidance on how to report and administer those. So people are afraid to touch them yet. All right, Tom's right. All right, we'll take a call.
Finally.
Fast call. Scott, welcome to Talking Real Money.
You go, man.
Yeah. Hi, gentlemen. I've listened to you extensively in the past about annuities and what you don't like about annuities. And, what to avoid from annuities. Are you guys ever going to dedicate a show on annuities that you do like?
Would be a short show.
Immediate annuity.
It'd be about, and plus we would qualify that to the point where it would really end up with we barely like any, and if we like them with a ton of caveats.
Yeah, the problem always is if we say we like them a little bit, then everybody says you like annuities.
Yeah.
Well, we don't really favor them.
I'd rather people think we don't like them at all than imply that there are really good uses for them. There aren't any really good uses. There are some acceptable uses.
That's a good way to put it. Yeah, an immediate annuity, sure, put the money in, get your money back.
And that's interest. It. That's the only one. That was the show. And that worked out because really we got a whole show in the last part of the show.
We appreciate the call.
All right.
Don't buy an annuity. Anything else? Yeah, that'll do it. So
thanks, Scott. We appreciate you.
That's you answered my question. Thank you very much.
You're welcome. Take care.
Thank you. All right.
Shortest show in history. Hello, everybody. Welcome to Talking Real Money. Today we're going to talk about our favorite annuities. None. Goodbye. Thank you for being there.
Next question.
Next show. Yeah. We're out of time for this one. Thanks so much for being with us. Oh, I want to let you know. Program note.
What?
Next week. What's the date?
Next 2 weeks.
I know. Next 2 weeks. Two
June
Saturdays.
21st and 28th.
Yeah. Right around my birthday, I'm being left alone again. Tom's deserting me for
all by himself.
Please don't sing.
Yeah.
You're just making it worse.
Yeah,
You're just making it worse.
I'm calling you on your birthday from wherever I am. I don't know where I'm going to be.
Alone next Saturday and the Saturday after that.
So call
the only
a lot.
comfort and joy I'll have in my life without Tom here is you guys. So please
how happy he is. This is what he lives for, is for me to be out of town. So
it's just me.
Ring him up.
Tom can't tell me what to do anymore.
Exactly. Yeah.
So anyway, I'll be alone. But
Flying
we'll still
solo.
have all the podcasts because Tom did his job, and he made a bunch of extras, including one coming up with Herb Weisbaum, the Consumer Man. He's got another Tom and Roxy one.
It's pointless to go on vacation because you have to do so much to just leave the never
Tell
going
me about
again.
it. I'm taking a short vacation with my kids at Vero Beach, where I'll be working and doing shows.
Of course,
but I'm going to have to catch up. You always have to catch up on stuff. It's just silly.
Doesn't make sense. Anyway, I'll miss you all, especially you.
No,
you know who I'm talking about. I didn't say it was you. I said you know who I'm
somebody
talking about.
somebody else.
Yeah.
All right. If you have questions, please send them in at talkingrealmoney.com on the contact form. If you would like bigger help, you'd like to sit down maybe with an advisor and you're thinking, but I don't want to do this because I'm going to get a sales pitch. Well, we know there's one way you can do it and not get a sales pitch, and that's use one of our advisors. Even I don't care if they like it or not. Use them. Take advantage of them. Just go to talkingrealmoney.com and then look for that button that says Meet an Advisor. There.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.